This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, July 13th, 2015. Euro dollar. So the euro remains in a choppy mess at the moment, with the market showing no clear directional bias. At this time, we need to see a break back above the high that we saw back on the Monday of June 29th at 112.79, or a break back below the recent low that we saw the other week at 109.15 to really give a clearer short-term indication. A break below that low that we saw last week at 109.15 area would open the door for a retest of 108.19, the low that we saw back on the 27th of May, which guards against that critical multi-year low that we saw earlier this year in March at 104.62. At the same time, if we see a break back above that high that we saw back on the 29th of June at 112.79, this would open the door for a potential retest of the recent highs that we saw at 114.67, going back to the 15th of May. So that's what we're looking at right now. No clear indication of direction at the moment, though the medium-term downtrend remains firmly intact. Sterling dollar. So cable has broken down significantly off that 159.30 high, that 2015 high that was set back on the 18th of June. Those setbacks have recently been well supported ahead of critical lows going back to the early June 1st at 151.70. At this point, it's hard to tell with the market locked within the mid-range between 51.70 and that 2015 high at 59.30. And so it'll be interesting to see if we see a break back above recent highs around the 156 area, or a break back below last week's low, which comes in at 153.30 to give clearer directional insight here. Dollar yen. So dollar yen has seen some sharp pullbacks in recent days after putting in a fresh multi-year high at 125.85 back on the 5th of June. At this point, it's difficult to say whether the market's now put in a higher low last week at 2040 ahead of fresh upside, or if the market is looking to put in a lower top and continue with this correction lower back below the 2040 lows from last week and down towards the March lows in the 118.33 area. Euro Swiss. So Euro Swiss remains very well supported on dips and looks like it's in the process of attempting to establish a base in favor of a recovery eventually back above 105.75 and towards that key February peak at 108.15 further up. At this point, really only a break back below 102.35 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So Aussie remains locked within a well-defined downtrend after recently breaking below the previous 2015 base at 75.33 to open the door for fresh downside extension towards the 70 psychological barrier further down. At this point, any rallies in Aussie should be very well capped ahead of the 76 area, will ultimately only back above 78.49. That lower top that we saw going back to the 18th of June would really force a shift in the structure. Dollar CAD. So dollar CAD remains very well supported on dips, and the market has recently put in a medium-term higher low, going back to that low that we saw back on the 14th of May, which comes in around the 119.20 area. At this point, clearly the market is focused on a break of the 2015 high at 28.35, above which exposes fresh upside towards the 2009 peak at 130.65 further up. At this point, look for any setbacks on a short-term basis to be very well supported ahead of previous resistance at 25.63. Kiwi dollar. So Kiwi remains locked within a bearish channel over the past several weeks and months, and the market should continue to trade confined to this bearish channel for deeper setbacks down towards eventually a measured move objective, which comes in around the 65 barrier. At this point, look for any rallies to be very well capped ahead of the 68.50 area. SPX 500. So the S&P 500 continues to show signs of wanting to top out after posting fresh record highs at 21.37 in May, and the market is now focused on a potential break of the key March low, which comes in at 20.40. Look for a break below 20.40 to confirm the potential top in this market and open an acceleration of declines back down towards the 1900 area. At this point, though, we do need to see a break and close below 20.40 to officially confirm some form of a top and accelerate declines. Gold. So gold remains very well supported on dips, though the market has recently broken down below some previous support in 1170 to suggest that we could now see a retest of the critical 2014 multi-year base at 1131. At this point, until we see a break back above, or unless we see a break back above the 1175 area at a minimum, the pressure does remain on the downside for a retest of that 1131 2014 base. Ultimately, however, the market would need to now break back above the 1232 high that we saw back on the 18th of May to take the pressure off the downside and open the door for an acceleration of gains.